Get to the chopper!
Hello everybody and welcome back to the channel and today's video where we're going to look at top 4 hydrogen stocks part 2. Previously we have focused a lot on the American companies and now the time has come to look at some of the European counterparts. And as you can see here from the graphs, the return over the last 2 years has been tremendous for all these 4 companies. The one that has provided the lowest one with 431.51% is Nel Stock, which is a Norwegian company. The stock ticker is NLLSF. The price today is $3.88 a share and the market cap is 5.3 billion. Then we have the next one with 542.12%. It's a Swedish company called Powercell, which the price today is $51.37 a share and the market cap is 2.6 billion, so significantly smaller than Nel. Next one, we have Ceres Power, stock ticker CWR. It has returned 865.92%. The price today is $2,012.53 a share and the market cap is 3.5 billion. And finally, we have the one that has returned astonishingly 3,362.45%. It is ITM Power, which is a British company. The price today is $9.31 a share and the market cap is 3.8 billion. So again, tremendous return, and let's dig in and look at these numbers and let's see if we believe that there's value to be captured with these stocks or not. So obviously we first want to understand whether these companies are profitable in the end of the day, and by no surprise with the hydrogen stocks, they are not profitable as of today. If you take ITM as an example, they have more than $40 million minus over the last year and they only had a revenue on $4.5 million. So again, the share price have gone up over the last 2 years with 3,000%, but they're still only selling for $4.5 million. So perhaps there's something in their technology that is attractive and which the market expect will take off in the future. But right now, they are hugely non-profitable. If you take CWR, they have a minus on $6.3 million on a revenue of $23.5 million, so a lot better, at least than ITM as of today. Then you have Powercell here, $11 million revenue, and they're losing $13 million or almost $13 million, so quite significant. And then you have NLLSF, Nel, which is the one that is biggest by revenue, $62 million, and they're losing $15 million as of today. So they're still unprofitable, but not as much as some of the other compared to the revenue. And that is obviously reflected in the net profit margin, which you can see here, ITM almost minus 900%, so quite significant. CWR a lot better, minus 27%. Powercell minus 116%, and Nel is down with 25%, so respectable. So quite significant difference between the companies as of today. We can also take a look at the BNSM score, which is a mathematical model that determines whether the company has manipulated its profit. We want this in general to be less than 2.22. Minus, and as we can see across the board, with the exception of CWR and Nel, is looking quite well. No major red flags here. We can also look at the Sloan ratio, which identifies if a substantial part of the earnings are non-cash accruals. We want this to be between minus 10 to 10%. It's looking really well here, with the exception of ITM, which has a 28% here. So again, only 4.5 million revenue, and the Sloan ratio identified that part of this is non-cash accruals. So that's a small red flag for them for sure. So again, we looked at the stock, we looked at the trend. Definitely all these stocks are in an uptrend. That is part of a wider sector hype that is going on at the moment, where hydrogen stocks are booming, irrespective of whether the companies are delivering good results or not. And this is also the case with these 4 companies. We looked at the net income. They are all negative, no surprise there. Some have higher minus net income than others. And the net profit margin, Nel was doing the best, followed by Ceres Power, Powercell, and then ITM Power was by far doing the worst. Next, we go into the return metrics, and we want to understand how high returns and cash flow margins is being generated by these companies. And if we take a look at the return on invested capital, we can see that ITM are doing the worst again with minus 62%. CWR a lot more respectable, minus 7%. Powercell minus 19%, and Nel is doing the best with minus 5%, so no big surprises there. On the free cash flow margin, ITM again doing significantly worse than the rest. Here a positive one is actually Powercell, which has a plus of 1.9%, so that's quite good, while as CWR and Nel are also doing quite bad. Again, not a huge surprise given that all these companies are non-profitable, but again we are seeing a few red flags with ITM as of now. So therefore, it's obviously important to look at the balance sheet and ratios and understand how strong the financial position are of these companies. How long can they fund their operations without having to go and raise more equity in the market? So if we look at the current ratio, in general, we want this to be above 1. And as we can see across the board, really good, strong, solid numbers. So no concerns if we look at that. On the cash ratio, we also want this to be above 1 in general, and as we can see here, 1.89 for ITM, and really good for the rest of the companies, 6.6, 7.83 and 6.58. So here, although the numbers are green, we would state that for ITM it is not that great, because they were losing 40 million over the last 1 year, and they only have $55 million in their cash reserves and short-term investment. So we would basically expect that this company will have to go to the market or other ways to raise equity in the future, and that will obviously dilute shareholder values, while as all the other ones with the current revenue, cost and the net income in the end, they can keep themselves running for quite a few years. So no big concerns with them. They may need to raise more equity, but they would probably do that as part of a wider effort to basically grow their business and have more money to invest into to growing their business. So we're not really concerned about that. The same thing if we look at the total ratio, the total assets versus total liabilities, want this to be above 1.5, and as we can see here, really strong numbers across the board. It's looking really solid, which is good to see. The debt equity ratio, again, really strong, solid across the board. There's none of them which have any red flags. We can also look at the Altman Z score, which is the credit strength test that assesses the likelihood of bankruptcy. And as we can see here, we want this to be a 1.8, and all of them are delivering significantly above this. It's really solid numbers, but we would say there's especially one number that is sticking out. And the reason for why this is so high is due to a single number which compare the market capitalization of these companies versus their total liabilities. And as we saw initially in the video, the market cap of these companies have grown significantly over the last 2 years, and this number is therefore skewing a bit the Altman Z score. So again, we need to take these numbers with a grain of salt, even though they look fantastic. And that's why it's good to have another score like the Piotrowski score, which is another way to assess the strength of the company's financial position. In general, we want this to be equal or above 5. However, none of the companies are living up to that as of today. However, we would say that although all the companies are not profitable, at least for Ceres Power, Powercell and Nel is looking quite okay when looking at the balance sheet. So again, back to the overall overview, we looked at the return on invested capital and the free cash flow margin. And again, for both the situations, again, not fantastic numbers were delivered by the companies, which is by no surprise when we look at the net income margin of them. But Nel was doing the best on the return on invested capital, ITM Power doing the worst. On the free cash flow margin, Powercell was doing the best, quite surprising and really positive to see, while as ITM Power again were doing the worst. We looked at the total ratio, looking really solid across the board. So even though you see the 1, 2, 3, 4 here for the companies, it's looking solid for all of them. So keep this in mind. Similar story with the debt equity ratio. Really strong, solid numbers across the board. So nothing to really be concerned about with any of the companies from the balance sheet perspective, with the exception of ITM Power and their cash balance and short-term investment ratio, which will not be sufficient to cover the deficit that they have over at least the last year for a long period of time. We then move into the shareholder yield, and we want to understand how much value is returned to shareholders through either dividend and or buyback yield. And again, for this type of company, no surprise, none of them are paying any dividend as of today. So again, no surprise. On the buyback yield, we would actually expect that these have raised equity, of course. And as you can see in 3 of the cases, the ITM, the Ceres Power, and the Nel, all of them has raised more equity by issuance of more shares. It makes sense. The share price have gone up considerably. So even though they have diluted the shareholder value a bit by issuing more stocks, they're also getting more capital to grow their business. So across the board, it's quite fine. And this was what we were going to expect for companies like this. So next, we obviously want to understand whether these companies are expected to grow in the future, and we want to understand some of the metrics of how they look today. Here, a very important one is the price to sales ratio, which is an indication of how much you pay for the share compared to the revenue that it's generating. And as you saw in one of the American companies that we touched upon, we were criticizing some of these companies for having a very high price to sales ratio, which is a red flag to us because it's a metric to see that they're basically very expensive compared to how much revenue they're generating. But when you compare the American companies to the European counterparts, they would actually appear quite attractive. But as you can see here with ITM Power, 832.9, it's insanely high. But again, it just shows they are very expensive compared to the revenue that they're generating. Then you have Ceres Power, CWR, they would appear more attractive, but again, 147.1 is extremely high. Similar with Powercell on 240.4. The only one that has a still insanely high, but still looks relatively okay compared to the revenue is Nel with 86. But this is just to illustrate that the revenue is not that high, but the price you're paying for the share compared to this is insanely high. The next is the earning per share for the last 12 months. And what we wanted to include in this is how some of the analysts expect that it will look like in 2021, the current year, and 2024. And as we can see with ITM Power, they're actually expecting to more or less have a positive EPS in around 4 years, which is a good indication. That's good to see that they will become profitable. Some of the risk with some of these hydrogen stocks is that they haven't been profitable for the last 25 years, and there's concerns as to whether they will ever become profitable. So when there is indications that the companies could actually become profitable, that's obviously a really good sign. Similar situation on CWR, but not as good. They will still have a small minus expected in 2024. You will see here for Powercell an extreme bullish case. We want to stress that you need to still take this with a grain of salt because it is based on estimates, and in certain cases it's a few analysts that are saying what they expect the EPS to look like in 2024. But we would say if this holds true, whoa, that's really good for Powercell to take from a minus 0.248 per share to go to 4.41 per share. But again, it's one analyst in that particular case for Powercell, so it could be one that is extreme bullish. So take it with a grain of salt, but at least an indication that this company has the possibility to turn profitable. And similar situation with Nel, they are also expecting to have small profitability in 2024, so really good. We can also look at the revenue growth for the last 12 months, and as we can see here, ITM actually declined with 28% over the last year. So again, another red flag. They are only selling for 4.5 million. So we do understand that and a change in this can mean big fluctuation from a revenue growth or decline perspective. But 28% is just really poor when you see that they only have 4.5 million in revenue, while as CWR, Powercell have done really well, 46 and 36%, and Nel has also done respectively with 8% increase. Keep in mind that they have a much larger revenue than the two other companies. From a net profit growth, ITM has actually done a lot better. They've improved with 213%, so that's good. They are losing less money, but again, it needs to be taken into the context of the revenue versus how the net income is looking, which is really poor as of today. All the other ones are losing more money, which would under usual circumstances be a huge red flag, but we do acknowledge that we need to investigate these companies more in detail to understand why the net profit has decreased. Is it because they are expanding their business? Are they hiring more people? Are they buying machinery? What is the reason for that? They may do the investment now to reap the benefits in the future. So for this type of companies, you need to take the net profit growth with a grain of salt, we would say. So again, in the overall view, we looked at the EPS growth forecast for 2024, and this is obviously our own assessment, but we believe that the best one is the Powercell, which is expected to have significant profitability already in 4 years. We would put a disclaimer that is only one analyst, so keep that in mind. Nel also turning positive, which is good. ITM Power close to profitability, and Ceres Power is still expected to have a minus at the stage, so that's why they're getting a 4. But we would say that all of them are expected to improve their EPS over the coming years, which are good. On the revenue growth perspective, Ceres Power and Powercell was doing the best. Nel was doing respectable compared to the revenue that they currently had, and ITM Power was a bit of a disappointment to us. On the net income growth, on the other hand, ITM Power was doing a lot better, but keep in mind that their minus is quite significant, so you need to again take this number with a bit grain of salt, and all the other ones were having a negative net profit growth, which could be due to investment in their business. Next, we obviously want to understand whether these companies are currently under or overvalued. And if you saw our initial part 1 hydrogen stock video with the American companies, you can definitely see that our assessment at the time has not proved to be correct in terms of how the share prices of the companies developed over the coming months. But this is also just to illustrate that the numbers are only part of the equation, and you need to understand the sector as a general and how it is expected to perform, and also to do individual analysis of each company. This is something that we expect to do of some of these companies in the next week. We definitely have Nel in the look, so that will most likely come in the coming week to better understand the company, because again, the numbers are only one part of the equation. But what we are seeing as of today, when we look at the numbers that we have presented for us, is that the fair value upside or downside on each company, on ITM we see a downside on 49.30%, on CWR we see a minus 20.24%, on PCell we see a downside on 28.91%, and we see a downside on Nel on 27.32%. Again, similar to the other companies that we have assessed, although there are many good news for hydrogen stocks, there's a lot of governments around the world who have ambitious plans to invest in hydrogen sector. We still believe that some of these companies, their numbers does not justify the increases that they have had. That is just our perspective. We need to be true to how we see the world and how we assess companies, and how we are assessing these companies. It is that there is just not a lot more upside to them, or there's a huge risk at a certain point there's coming a correction and then they will drop significantly. That's just how we see it. It doesn't mean that they cannot continue to grow going forward, but that's how we see it. We can also look at the beta ratio, which just shows the stock's volatility in relation to the overall market. And if it's above 1, it means it's more volatile. Below, it's less volatile. And here we were quite surprised to see that a lot of them seems to be aligned with the general market. It's around 1. Obviously, CWR is a bit higher. PCell is a bit lower, and Nel is around the market when you consider how much the share price have grown recently. But again, apparently from a beta ratio perspective, they are not as volatile as what we would thought they were going to be, with the exception of ITM. We can also look at some other indicator. One of them is to look at the BV ratio. Here we want this to be above 1 because it means it's undervalued. And as we can see across the board, all of them are overvalued. From a relative strength index for the last 14 days, we want this to be below 30 because it means it's oversold, and this is a technical indicator that they may go in an uptrend. If it's above 70, it's in overbought territory, and this could be an indication that the companies are going to do a pullback. And as we can see here, ITM and Ceres Power are all in overbought territory, and PCell and Nel are moving towards that, but are not yet there, so no clear indication with them. We can also have a look at what the analyst perspective is, and basically we just want to take and have a look and see how they assess these stocks compared to our own assessment. As we have seen in other videos, there can be quite significant difference between what they see and what we see. Again, for these companies, not all of them are followed as closely by many analysts. So again, one example here is PCell that is only followed by one analyst as far as we could see. But basically what they see on the consensus price target, which is just the middle ground of all estimates. Some analysts will have higher price targets, some of them will have lower. They see an upside and downside. On ITM, it's a downside on 40.92%. On Ceres Power, it's 44.60%. A small 1% downside on PCell, but again, as we said, we could only find one analyst, so again, take this with a grain of salt. And for Nel, they see a downside on 19.85%. So we are quite aligned with the analyst on this one, that the hydrogen stocks that we are analyzing today seems to be a bit overvalued. So finally, back to the overall overview. No surprise, the overall value assessment of these companies are that they are, at least in the short term, all overvalued. So what is the CMD verdict of all these stocks? Well, all stocks are naturally overvalued. However, we want to stress with these hydrogen stocks, it's very important to do a deep analysis of the company, take an assessment of what their perspectives are in the future, what is their strategy, how do they see themselves in 4 or 5 years, how have their growth rates been within various areas, and etc., because it could still prove that although the numbers indicate that they're overvalued, there could actually be good value to capture in some of them. And that's also why, as we said, we are expecting to do a deeper analysis on most of these companies in the coming weeks. So please subscribe if you haven't done that, to make sure that you get the notification once we launch the video on these companies. However, if we should say ITM Power, in our opinion, is the most overvalued of the stocks, the fundamental numbers does not justify the current share price. I mean, $4.5 million, it has decreased over the last year. They're losing $40 million a year. They only have a cash balance on $55 million. I mean, we don't see a lot of good fundamental indicators with this company. But again, a deep analysis may show something else. But for now, this is the stock that we least like among the bunch. Then we have Ceres Power. We would say that they have relative good numbers across the board. They have very good revenue growth, and they have a relative strong balance sheet. So we see them as being quite okay. We don't see them as being an attractive investment, but again, on the numbers, they don't look too bad. Then we have Powercell. They also have relative decent numbers, but it's still the third least attractive stock of the ones that we are seeing overall. We do understand that one analyst is very bullish on them and see an EPS in 2024 being hugely profitable, but we would doubt that a bit considering the general expectation for the hydrogen sector and companies. And again, we see Ceres Power as at least being more attractive than Powercell, at least based on the numbers. Finally, we have Nel. Relative good numbers across the board. Again, they have strong sales, they have decent revenue growth, and they have a strong balance sheet. I guess looking fundamentally at the numbers, we actually think that this is the most attractive company of the 4 companies, at least when we look at the fundamental numbers. And that's also why we have selected them as the first company that we want to investigate a bit deeper to understand a bit more about the company and see what the prospects are in the future. But again, our recommendation is not to buy any of these stocks as of today. But keep in mind, we only do this for entertainment purposes, and you need to do your own due diligence when investigating these companies. We are not professional. Please keep that in mind. This was all we had for today. We really hope you like this video. Please subscribe for future content so you get the notification of the upcoming videos that we're doing on these companies individually. Please also give us a like, it really helps with the algorithm. And please provide a comment in the comment section. We always appreciate your input. And obviously, some of you have a lot more knowledge about these companies than we have ourselves. And it's always good for the community to get input from various people. Besides that, there's not much more to say than have a nice day, stay safe, hasta la vista, baby.